Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Monday morning pre-market webcast. Okay, let's start on the daily chart with just a quick review where we've been and where we are. Um, you had your Brexit high. They took it down to 1981, 1982, bounced it, did a failed lower high here in the 2104 area, um, created a new floor at 2081, 2082, broke it up over 0475, rested it up above 2168, 2169 for about 8 sessions, tested the mid band successfully, took it up to what we're compressing very tightly um, into some very tight Bollinger Bands, constituting a full Bollinger Band squeeze. It rode these tight upper bands for about 6 sessions, and what we've done since creating a new high, the most recent high, back on August the 15th, is we've done two pullbacks to the daily mid band. In order for the bears to get anything going, they're going to have to break through the mid band. The other thing they've had an issue with is being able to convert the weekly pivot. This week, the weekly pivot comes in at 2179.5. So this is a 30-minute chart. Last week's weekly pivot was 77.20. You had tests, you had attempts to convert. Bears continue to blow chances to be able to convert the weekly pivot. And what we've seen in calendar year 2015 to 2016 is whoever controls the weekly pivot controls the short-term direction of the tape. So as long as weekly pivot is underneath, it's dip buys and the bulls are ultimately going to prosper. Maybe not a lot, certainly wasn't much last week, but they're not going to give up a bunch of ground. The other side of the coin is if the bears can take weekly pivot, can turn it into resistance on a consistent basis, then you're going to see these continued moves down to the daily mid band. And the more that happens, the more likely it is the bears are going to be able to convert that, do something deeper, go down to the lower band on the daily chart, which is down at 2154 because these bands are so tight. But if the bears want that band expansion, if they want the bigger move down, that's where it starts. The good news for the bears is we haven't challenged 90.75 since the 15th, and we haven't challenged the lower high that was established at 2186, right here, 2186, since we first dealt with it on the 16th. So initially you had another lower high at 81. Here was your dip buy last week. This is the weekly low at 65.5. They took it all the way back. So this was a big moment for the bears to blow it. They really had a chance to retest daily pivot and then do one more lower low, and that would have got the fail started. They couldn't get it done. Once we got back over here Thursday, Friday, what we just saw were some moves back to the daily pivot. The weekly pivot. Those moves were rejected. But just as important, we saw multiple moves to 2184, 2183 half to 2184 half. You see it all right here. They were not able to get through. Now we get into Globex tonight, and you're seeing the same deal. Here's 84. So you've got the daily pivot and the weekly pivot within half of a handle of each other. 2179 half, 2179.75. So you've got some very familiar battle lines. You've got 84 on the up, weekly pivot on the down, weekly pivot, daily pivot. Whoever wins this zone is going to win the short-term part of the tape. The key for both sides is once they get something converted, they need to keep it converted. If the bulls can get over the top of 84 and establish 84 as support, what you'll see is very similar action to what you saw down at 68.69. 68.69 had done the same thing for a very long time, but once they got over the top, right back here we had resistance go support. And then, you can violate it a little bit, but it turns out to be a great buy area. This is what the bears can't have, because if you establish a foothold of support at 2184, then we'll be trading things with 22s in front of them real quick. What the bears want to do is keep 84 locked up, keep 86 and 90.75 where they are, which is already locked up. Go to work, weekly pivot, daily pivot, seal weekly pivot, daily pivot, break this low, break this low, and then break the 65 half. If they can do all that, then they get their move down. How far it goes depends a lot on the bears. The number one mistake the bears make is getting way too far ahead of themselves too fast. If they were smart, they would just steadily stair step it down. We'll see. We remain above the middle band on the daily chart, so your first instinct has to be to buy dips. And in a vacuum, this market wants to go up. Whether anybody wants it to or not, that's the reality of the price action, and you have to respect that until it's no longer true. Okay, everybody have a fantastic day. Follow us over at Twitter, at Princeton Trader. Come check out the website, princetontrader.com. Come check out the chat room. New week, great time to start. We would love to meet you. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.